Again, thanks them for taking the time for the community, and very happy to have you here. Please take it away.
Thank you. Yeah, I'm very honored to join this community. I look forward to learning from all of you. I think, we're always newbies in this community. This community changes all the time. And I would love to learn from all of you. And I really mean that humbly. And I look forward to hearing your feedback as well. I don't profess to say we have all the answers, but I will say that we're trying. And we're very much trying to improve the UX of digital consumer finance in Japan. And we're really passionate about changing one thing. We think finance in Japan is very complex. We think it's confusing. We think it takes too much time and it causes stress. And actually, consumer finance should be, and the financial sector should actually make consumers feel good. And we've seen markets around the world where they have achieved that. And we believe Japan is the key market in the world where this can happen. And I'll talk a little bit about that. But it all starts from a passion of simplifying finance, really, and simplifying a checkout, which is the most scariest part. So I'm going to share some slides, and I hope it's not too boring at this time of night. So just tell me if I am boring you at any stage. There's nothing worse than a founder spouting off about his company for too long. So a little bit about me. So this is me on the left. Before I joined MasterCard, actually, my career was with Starbucks, and I ran Starbucks Asia Pacific, and very lucky to launch a very important product for Starbucks across Asia Pacific. And actually, I know it sounds like marketing, but I launched the biggest, obviously, loyalty card in the world at that time, which is Starbucks loyalty card. And those of you know in Japan that Starbucks is very successful in Japan, very successful in Asia Pacific. And I was head of digital, and I was obviously part of the team that launched that. And Starbucks loyalty card really broke a lot of boundaries. I mean, this is back in 2010, and we were launching like really new technology. And this was like when Apple phones were even defining what they were going to go with in terms of NFC or Bluetooth. And this is really like, OG stuff. I sound old, but this is when really that sort of mobile payment sector really was just doing its thing. And really the loyalty card was really driving that, because our loyalty card was on app and in app. And so it needed all that technology at the point of sale. It needed integration with systems. It needed integration with payments and cards and processes. And so it was a great place to start. And I realized that payments really wasn't about just technology. It was about ecosystems. And so that's really grabbed my attention. So I then joined MasterCard, actually. And then MasterCard was the company I found with the second biggest ecosystem, and after Visa. And really I loved connecting the merchants to the issuers, to the consumers and processors and acquirers, and learning even deeper about that. And then from there I went to Standard Chartered Bank, where I learned banking, and I was head of digital for retail and wealth. And I realized that banks don't make money from payments. And actually they want wealth and insurance and mortgages and everything, and payments is just like a real hassle. And then the tech companies came along, and the banks realized we need payments. And people were like, no, you don't, it's not profitable. And they're like, no, we need payments. It's the data. We don't have any data. We're losing the data. And they're losing the relevancy and the daily relationships. So payments then suddenly became important. But it was too late, because legacy systems are really hard to change in banks. 4 years, billions of dollars. So that's where you sort of saw the FinTechs and the payment tech companies really boom. And the only reason they boom was two reasons. Is that I think they're really good at marketing. They're really good at understanding consumer mindset, UX, and positioning. And people like Afterpay, and like I would say Afterpay and Klarna and Affirm, I don't think they would have existed actually if there wasn't legacy system issues at the banks. And so they came up and they really sort of changed the way people saw how consumer credit and payment could happen. And so that's when I joined Peter Yan, who was ex-Paydi in Japan. I was running Facebook payments, and I was building all the platforms, so WhatsApp, Instagram, Facebook Marketplace, enabling merchants to obviously buy advertising, number one. Number two, allowing them to sell products in-app so they didn't have to go outside. And then thirdly, building very, very new technology like WhatsApp, P2P, WhatsApp catalog for businesses, Instagram, which are now rolling out. And I did a lot of work in Japan, right? So I used Stripe in Japan to build those platforms. And Japan's actually nearly the biggest Instagram market in the world now. So it really was an important market, spent a lot of time there. So let's spend a lot of time in Japan with Starbucks, MasterCard, and Facebook. And so that was over 15 years. And so then really fell in love with the country, fell in love with the opportunity, fell in love with the culture, as we all do. And we decided that we would open the company in Japan. And learning the learnings that Peter Yan had from Paydi and Stripe, and my learnings from Facebook, MasterCard, and also the rollout like Starbucks, we decided to tackle Japan. So that's the story of why we chose Japan. That's the first question people ask. And then I might just sort of change gears to, okay, what do you want to be? And our vision is to be the first one-click financial solution in Japan. We want to target. We want to target the higher middle income user in Japan. So we're different than Paydi. I just want to, those that know Paydi in Japan, Paydi is a very successful company bought by PayPal for around $3 billion about a year ago. And they target sort of the younger crew, the crew that don't have credit cards, the 19, 25-year-olds that sort of discretionary spend. And with Paydi, you have to go to the Kombini store, the convenience store, to make the payment. So what we're doing is a little bit different. We're targeting the middle and high income. Our average order value is $276 per purchase. So it's 3 times higher than Paydi. Our average age is 34, so it's a lot higher than Paydi. And I'll talk to you how we did that, but we're targeting that sort of next level up. They do need different products, they do different brands, and they do need different experiences. So we purposely built different so that we could say to merchants, you can have Paydi and Smartpay, and they coexist. And we believe that that's the case. And there's sort of some key words there: one-click digital payment and financial solution at point of purchase. Where we think things are a little bit broken in Japan is at the point of purchase, and the issues, the UX takes so long. Like it's just painful to, if you go to a new merchant, filling in all your credit card details, your name, your address, it takes longer than the shopping. That was the key insight that we had. And so the other key insight in Japan we had was, I get very nervous giving people my name, my email, my phone number, my bank card, and my address. Like, I wouldn't give someone that on my third date, let alone a merchant I don't know. So there is this underlying fear of, and then also we're getting a lot of credit card fraud and stolen, information in the news. So the consumers were seeing that, and so that was driving a lot of sales for Rakuten and Alibaba and those places. But for the small merchant in Japan, they're like, well, why am I getting all these customers on my site, but then they're leaving at the cart? And then there's this realization, it is the UX of the checkout. It's not my products. And people are scared to give all that information. The last thing I'll say is in Japan, and those that know Japan well, is the Japanese consumer, even though they are one of the wealthiest and highest savings rate, they work on a monthly budget. And often the lady of the house will come and have an amount of cash that they can spend per month, and then they will divvy it up. And it's a very much the monthly budget household. And we see that in a number of countries around the world with similar cultures. Now, yes, they can spend more than that, but if they do, they have a feeling of going backwards. So the fear is, if I spend more than I budget, I'm going backwards in life. And that fear is an awful fear for them. So what we are doing is obviously enabling them to spread their cash flow over a number of months so they can afford the product. It's just, can I afford to give the whole amount this month? Can I spread it out? So we look to do that over 3, 6, and 12 months. And so we say we're helping with monthly cash flow to people that can afford it. That's very important to us as well. So to do that, we built differently, right? So one, we enabled direct to your bank account payment. So we're the first to do that. We use the open API banking, working with SMBC, our key investor, and we worked for a year building the system with Jepo. I'll give you an example. Working with Jepo was fantastic. Most people say working with regulatory is hard. We saw it as part of product development. And I'll give you an example. In the payment solution, when you pay directly from your bank account, it's fantastic, right? So you go in and all your bank accounts will come up, but before they come up, you've got a biometric security step, which is your face, and then your bank accounts will come up, and then you're about to select payment, and you've got to do another biometric. And it was a regulator that wanted us to have 2 biometrics, and I'll be honest to you, we were like, we are about speed and latency, and like, no, really? And they're like, yeah, we want two biometric steps. And I actually thankful we did that, because what it's done is it means consumers feel very safe paying from their bank account. And what we realized, if we didn't have those steps, I don't think we would have had the consumer's trust, actually. So you do learn. I think you do learn. And I'm not being rude. Working at large multinationals, they often treat regulators like the enemy. And I just think that's just so old school. Like, the regulators are just worried about 3 things. 1, consumer safety, that their data and their banks are safe. 2, your consumer technology and safety, stability and security is number 1 in the world. And then 3, they want to make sure that the system is sustainable, that the system can last. Like, they don't care about fintechs rising to unicorns, and that's, yeah, good luck. But it's about sustainability of the system. And so I was very lucky working with the companies I had. Is I've worked with a Japanese regulator for many years, and Indian regulators, and Indonesian regulators, and Australian regulators, and funnily, they talk a lot to each other. And I'm seeing us in fintech now. I think us as an industry are growing up in the relationship with regulators a little bit, and there has to be a partnership. There has to be. So after developing that product, we then had to sign the banks, right? We had to sign 73 banks, and we signed 73 banks in 6 months. And those of you that know Japan, signing 1 bank in 1 year is hard. And we signed 73, and it was my team who did that incredibly well. And the secret sauce there is that we are helping the banks connect their consumers to e-commerce. We pay them a percentage of the transaction, so they are monetary, from a monetary perspective, are monetizing through us. But they also can see that the technology is super safe. The technology enables their consumers to pay directly from their bank account. They make money, the consumer's happy, and the ecosystem's working. And that's what I said at the start, is I think we're all in an ecosystem here. So then we have dual acquiring with Adyen and Stripe, and that we're really proud that we both have Adyen and Stripe. They're incredible companies, and to have both is really good. That means our authorization rates are really high. And we learn a lot from Adyen and Stripe around fraud and risk as well, which in e-commerce now is really incredibly important. And then we with Shopify as well. So we got digital installments with Shopify, which is great. They're not huge in Japan, but it really enabled us to great start and a very good company. And obviously we're now on the Japanese platforms. We have a credit card product and a direct-to-bank product so that these consumers can choose. There's some products, as you know, consumers in Japan want to use their credit card for points. So we need to enable that to happen as well. So that's really the overview. SMBC is our key investor. They're more than an investor. They are a partner. They have taught us a lot around merchant acquisition. They've taught us a lot around moving with the regulator. They've taught us a lot around, which again, I'm sorry if I'm referring to people that know this on the call, but the way you move in Japan has to be very thoughtful. You can't be a startup in Japan. I know that sounds weird. You can't be in a garage and try things and make a mistake and say sorry later. I just don't think that's going to work. So you have to change that mindset, which is this has to be 100%. And I'm not sure that's a bad thing. It's different than America, where they actually enjoy that you're a startup and going to make mistakes and be fast and a little bit kooky. There's just no way that risk profile is going to work in finance in Japan. So we really take those steps very thoughtfully. We spend a year building, and I would say our counterparts overseas would see that as crazy. That's just crazy. But we could not launch until it is 100% worked. So that's the overview of the company. I guess the key for us is here on the value side, and I won't spend much more time. I've only got 5 more minutes, so I don't want to bore you guys and girls. But really, the left-hand side is we focus on that speed, stability, and security. Anyone in finance knows speed and security are diametrically opposed. How do you bring those together, right? And that's technology, that is just really high-quality stack that we really focus on. Simple installments. We select very key merchants to the consumers that we want, with our average order value of $276 per purchase. You can imagine the merchants that we choose. And then the merchants are appreciative because we're providing them a customer that's spending more, that will return and will check out. The key is the conversion at the end. So we have a very fast EKYC process for higher purchase orders. And then we cover the 70 banks. And we have a very low non-performing loan rate. So we're below 1%. And those that know finance in especially in startups, that's very low. So we have a very high AOV and a very low NPL. And that's through our technology and our AI, our credit risk, our fraud risk, our EKYC. Those on the call know that, so I don't need to explain that, but that's something that we've built. So that's this right-hand side, which is our yes, we do. We don't host on premise. Our platform is hosted in Japan. Just to answer that question that came up. I'm sorry, I'm not quick enough to answer the questions that come up, but I will get to them. So we have a Japan-hosted platform, multi-acquirer setup, SDKs in the language of the merchants in Japan, biometric auth, two-factor verification. All our payment information is encrypted. Even I do not see any of the consumer data. It's fully encrypted. And our consumer data is not stored with us. All payments are monitored 24 hours. So that security was really key. And then obviously our EKYC process is something that we took a long time for. I just want to end with my last slide, if you don't mind. So it's about the ecosystem and how is the risk and banking regulation. It's pretty similar. Yannis just asked about risk and fraud regulation in Japan. Is pretty similar, I would say, to other developed markets in the world. I wouldn't see much difference. So this is the ecosystem. SMBC is our key partner. We have the 73 banks. Then we have the relationship with the regulator. And relationship with a regulator is like marriage. I'm still scared of my wife. That's just to be honest. So it's still you're never perfect, right? But it's a relationship, and so there's still anxiety, but they know that we want to work with them. We really want, and we've got the best intentions, right? But we want to move fast. So that's where the dichotomy is. And then we have Adyen, Stripe, Visa, Shopify, and the Japanese partners. And what we focus on is that tech stack and the risk management in the center of it is the best we possibly can build in Japan. We overinvested for the first year. To the scariness of our investors, and Japan's expensive, right? So if you've got overseas investors and they're seeing the costs, yeah. So that's where you really do, I think, have to overinvest is the quality in that first year. Then the second thing is I make sure everyone makes money, and I'm really obviously very key. The merchant makes money. I charge them money. If they don't make money, I don't make money, and they like that. And if I don't grow their AOV, and I don't grow their conversions, and I don't grow their repeat rates, they drop me. If I don't make the consumer feel safe, easy UX, can pay directly from my bank account, and trusted, they're not going to use me. The banks aren't making money, and Stripe and Adyen aren't making. They're not. So we really focused on, in our unit economics, how does everyone make money, and for us to make money at the same time. And that's where I guess we're a little bit different as well. Is I feel that in Japan, different than I would say working in America, is we spend a lot of time making sure the other partners were making money from this from the start. And that, I think, if we're really clear on that in Japan, everyone understands what they're going to get out of it. I think it meant we moved it faster than we would have, but it's still slower than overseas. So we just have to go at that pace. So I think I'll stop there, and I hope that's a good overview, and hope I didn't go on too long, Norbert.
No, it's perfect. Thank you very much, Sam. Just one comment on the chart on the upper right corner, right? People might be wondering why METI is on there, and installment payments in Japan fall under METI rather than under the financial services regulator. So that's why they're there. I had one questions on the relationship with the banks. So signing up 70 banks, right? From the integration perspective, is like Japo just an organization, or does it provide a middle layer so you have one connectivity and you go to 70 banks, or does it mean you also had to build 70 times the connectivity, the API connectivity for the direct debit to the individual banks?
Yeah, I would say probably 70%, not 100%. And those that know that we have to spend a lot of time with the APIs and the integration. Yeah, it's not easy. Yeah.
Because for me that means, right, the open banking is one of the things where Japan was very early with the regulation, but it was not really forced, and what they left open in the regulation was, right, the question that you addressed so perfectly, is like, who actually pays for the connectivity? And that's when it kicked off, right? It didn't really move fast, except for maybe, let's say, the big guns, right? Like Money Forward and Money Tree, who had like quite a few connections, but everybody else seemed to struggle. And it went to the point that, I don't know if it was the FSA or the Bank of Japan, one of them got very worried about the progress. And then over a 6 month period, there came 2 reports basically taking a snapshot of the banks providing the API, right? How many contracts have they signed with people using the APIs? And then the payments provider, how many banks have they signed up? And since then, and that was pre-pandemic, so let's say these reports came out 2019 or so. And since then, this whole open banking space has been pretty opaque for me, I must say. It's very hard to keep track. But the fact that you're saying it took you 6 months for 73 banks, it seems like much healthier than I probably would have expected at this point.
I would say that I was very lucky with my team. I had a very experienced team that knew how to work with the Japanese banks and knew exactly what we needed to do. I don't think that yeah, I am very lucky with the team. I would say something that you write about a lot and publish a lot, Norman, is in the last 7 months, I see a massive change of trajectory in Japan with everything in the ecosystem. I just see things about to take off, and I think that there is a lot more effort by the banks to get things right. There's a lot more effort for the regulators to get things right. I think that I can just see a shift, a mind shift throughout the whole system of, right, it's time now. It's time we do it. And I know you write about this a lot, but I sense it in the market.
Well, I mean, your word in God's ear is like, we really need to change here, right?
Yeah.
Christopher, you had a question.
Yeah, thanks, Norbert, and thanks, Sam, for joining us today. I'm curious just from this diagram, and I love that, Sam, that you're talking about ecosystem, because I think a lot of the leading fintech players, not only in Japan, but also, of course, in Asia and in the US and Australia, are kind of leading with that kind of ecosystem mindset. I'm curious, with your experience of kind of tying up with a key FI like SMBC and their venture capital arm, as well as kind of tied into an additional question I think that was posted a moment ago. How do you see the balance between kind of working closely with partners to build an ecosystem versus competition? And I'm curious to what extent SMBC as a good partner was critical to Smartpay being successful. And do you find yourself having to kind of trade off the innovation versus working with the needs of your key partners? Because Japan, as we all know, can be a very different market in that regard.
Yeah, great question. I think I learned a lot working when I was at Facebook. Facebook is very good at knowing that you have to work within an ecosystem, and if everyone makes money and does well, they'll be there, but it could change next year, but that's fine. It's more about momentum. It's more about let's move. I think the danger is if you worry about people competing against you, you don't move, and then you don't create the partnership, and then you don't create the value. And I think that we are about moving. Let's move. Let's do this. And I don't think we would have got the 73 banks without SMBC as well. I think that's probably a part of the mix. I think that you're right saying that. I think we had a great team, though. The team, I would say we moved faster than they even imagined. And I can say that honestly because we had that feedback. They couldn't believe how fast we moved. So that's to your point as well. So you need both. And then there was a question: is Adyen and Stripe and Visa like a competition? I would say no. I think that they will always be a partner with us because we will always offer credit card payment as well as direct to bank. So they're happy with that. And like it was interesting. Like in Japan, I think I was very surprised that PayPal bought Paydi. That was a very interesting move, and all they're doing is plug it into their system, right? So it turns out to be a clever move. So I don't think the future. It's about a moving puzzle that will always change, and you have to adapt to the puzzle versus guessing. And so we just want to move, and I guess that's the approach we take. It could be naive.
It seems successful so far, but thank you for sharing. I appreciate it.
But it's a great question. I don't think we try to answer it. Yeah.
I mean, an organization like SMBC is obviously huge, and so it's almost unavoidable that there are areas where you compete, right? But specifically, I must say, and it again plays to what you said, that we're maybe kind of on the cusp of a major change, because they came out, SMBC and Visa, in March with their Olive Card, which is the first deployment of that product by Visa globally. It's a combined debit and credit card, and you can basically on the app change what it is and how you pay. I think from that perspective, it is certainly one of the best products in the market, and they've been slowly ramping that up, right? So you can arguably say that would be like on the debit side, a directly competitive product. But then again, there's 120 million people, and not everybody's going to use Olive, and not everybody's going to use Smartpay, and some people are going to use both, right? So,
Yep.
That's the landscape.
And I will say, this is to your point, which you're writing about, Norbert, where things are changing, is SMBC has been really good in identifying the key people that will partner with us from different parts within their bank to enable us to move and know where to go through that huge organization. And we've got like 3 people that we partner with that really are like incredible. They help us navigate that. And I don't think that would have happened 4 years ago. So I think that's a change. I'm seeing a lot of change in the market.
Sam, is that something you advocated for as you started partnering with SMBC or looking with them, or is that something that they kind of recognized internally and offered to you and the team?
It's what they recognized internally. And I felt like they'd gone through a learning. It felt like they'd learned that actually these little ants get lost very quickly. And we're tiny, so we're scared to ask, right? We're scared to, who do you ask in these massive organizations? Right. And so they've been fantastic at pinpointing the key people. Jeremy's got a question. It's how do you think that your company is based in Japan that builds the trust from SMB as an investor? I don't understand. Jeremy, do you want to just explain that? Maybe how do you think that your company is based in Japan? Norbert, am I reading that right?
Yeah, I was struggling with two, maybe also.
Yeah. Yes, I do think there's an advantage. Yeah, we have to be based in Japan. We have to be from Japan. Yes, great question, and we made that conscious effort. Yes, that's very important for us. Yeah.
When you're in a regulated business, right? I mean, for this type of business, you need a Japanese entity, you need the license, and you also need somebody who can be thrown into jail when things go wrong in the end.
Thanks, Lopez.
But it's the reality, right? And so if you want to get like the licenses that you have, or any other electronic payment license, I don't think there's a case where you can just kind of do this from offshore.
No, you can't. Yeah, and I think it's very much a market where trust is, if not one or two, the top factors. I'm surprised still how much personal relationships is very important in tech companies as well. Like it's still very much a personal relationship model, and so we have to consider that in how we organize ourselves and how we sell. And we've had to really make sure that we enable enough time for personal relationships to develop before asking for something. So that probably goes back to the point I made earlier, is I do have overseas investors, and the first 2 years had to spend a lot of time explaining differences. And it can sound like a broken record, and you can sound very petty. Oh, but in Japan it's like this, but it is different, and it needs to be explained. I still think obviously I've invested my time and my own personal money. I think it's the best market to invest in right now globally. I think, Norbert, you had an article from Warren Buffett, I think you posted the other day. But yeah, I think that it's a very exciting market, but you have to do it their way. And I'm telling everyone on the call this already that knows it. But it's a big learning.
I mean, I think the key tagline out of this call is like, you can't be a startup in Japan. It was just fantastic. I think that describes it really, really well, right? You can drill this up in so many different directions. So there was a question: how do you handle payment failures, payment switch? Also, right, if you have returns or so, how do you handle that with direct debits?
Yep. So we do it all internally. We manage all chargebacks. We manage all payment failures. We manage that all internally ourselves. So we don't outsource any of that. That's where I'd say, from our technology perspective and our payment back end, especially our back end, we spend a lot of time building for that. So yeah, I'd say that's a big part of our investment area, to make sure that the customer service for the merchant and the consumer, if there is a chargeback, if there's a refund, so we actually can refund directly to bank account. Now that's from a technology perspective quite hard to do, but we spent time building that so that we can enable that to happen as well.
And so you're taking it out of the bank account of the purchaser, obviously, and does it go directly into the bank account of the vendor, obviously minus the cut that you take as the processing fee, or is there still any number of days delay basically built in?
Yeah, there will be some days delayed. Yes, correct. But we're still proud we can refund it straight back to their bank account after a few days. Yeah, and it's a full refund. It's a full refund. We don't take cuts off it. Yeah, I mean, the only interesting thing I would like to add is I think fraud and risk management is much bigger and not sexy part of our jobs. And fraud and risk management is, I would say, 50% of your success going forward. So our mindset was very controlled growth, and we take growth in steps. We learn. We add merchants that are risky, knowing that they are risky, and we learn. We hire people with really deep expertise in these areas of fraud and risk, because the fraudsters these days are incredible. They make a move, you make a move, they make a move. It's incredible to watch that. It's scary to watch that. And so I would say to anyone, that's the thing that you don't want to underestimate, is fraud and risk. And that's not something that people talk about a lot. But where it is sexy is it's a lot of AI, it's a lot of data science, it's a lot of machine learning. And then you've got to fill your models with data. And so you're quite vulnerable early on because you don't have a lot of data in the models. So then you have to assume data to put into the models, which you can do, and we get modeling data from partners as well. But that's been a really exciting thing to watch, and to see the fraudsters at work is very scary at the moment.
Well, given your average ticket size, it's not like somebody going into a Famima or 7-Eleven and buying a sandwich for lunch, right? These are like big ticket items. So
yeah,
clearly, good risk management must be in place. Otherwise, you won't be successful.
Larissa asked a great question. Yeah, we dynamically we don't dynamically compare the fees. We dynamically choose the right authorization levels, but it's not a fee-based question. It's more around authorization, and the reason we work with both is they are both the best at risk management, fraud management, and really this industry. So we spend a lot of time, again, as I just said, learning off them as well. So we pretty much try to make sure it's equal. Yeah.
What is the kind of the volume that you see, or from which sectors do you get your volume so far, and kind of then also where's the future growth coming from?
Great question. So we focus on 4 sectors. One is fashion, 2 is sporting goods, 3 is household goods, and 4 electronics. And they're our key focus areas, and we'll stay with those areas. We would like to expand to new sectors, I would say in 6 months' time, that are higher risk, but higher spending. And when I get close to the time, I can sort of let you know what that is. And so we do have some sectors that we are looking at, but it's not about the volume, it's about the risk profile that we have to manage. So yeah, that's been interesting as well, because there's these huge pools of volume out there that I would just love to grab. But my risk manager's like, sorry, we're not ready for that. But that would be in about 6 months' time.
So your growth in the short term, and I mean like 12 or 18 months, by that in the Japanese context, is more sectors, but kind of in the current platform. So
Yes,
one could envision, right, also drilling up the functionality and saying maybe together with SMBC or so you're offering a bank account, but that's not in the near-term plan.
great question, and we will talk about that later. You're going to get me in trouble with my investors, Norbert.
Sorry.
How do you onboard a merchant? So with Shopify, it's kind of like a 5-minute process. We have an integration team. We have fully automated integration. For bigger merchants, we have an integration process that's often through their platforms. And then we are assigned a timing to work with their EC platform, and then they get integrated. But if they're on Shopify or the platforms that we are on, it can be up to a 10-minute process, which is great. Yeah, so that was one of the learnings that we had from our past experiences, was if you don't make the merchant integration process really good and really smooth and high quality, your whole business model can fall down. So you can focus on sales and marketing and UX and tech and look really flashy, and you forget about integration. And so that's a good question. We knew that had to be perfect. So we spent a lot of time on integration processes and APIs. In the business model, how you have set up a good working model for new startups in other countries, what would you change? Good question. I think I would say I really like my view, and it's my view only, is what I do like is I like working with the banks. So there's a lot of fintechs out there that say they're going to be the next bank. We're better than banks. The banks are old and nasty. And I'm different. I like to work with banks. So if I go into another market, which obviously we are assessing, we would work with the banks. And I think that is potentially the sort of next level of how companies like mine will work. Yeah, I think that I would do that. Yeah, as Jeremy's saying, it's something I have a passion for. Obviously, I come from banking, so I like to work with the banks, because my fundamental belief is the regulators want the banks to succeed. We, as an economy, will not enable our society to happen if the banks fail. And so I'm kind of betting that the banks will always be there. So that's why I think that I like to work with the banks.
I think coming less and less, because many of the regional ones are merging, but they won't go away, right?
They won't. Too big to fail.
Thinking about like risk to the model of the proposition in the end, I was thinking about it in the context of my introduction, essentially the different models, and I think the fifth one that I don't think we haven't really seen also in the open banking context in Japan, but it will be there by autumn, is essentially account-to-account payments. So even taking the direct debit out, and I think that obviously would take time to implement and to roll out, but would you see that as a competitive risk in the future?
So we will obviously try to innovate in that space, but you've got to remember that's a little bit different than what our core business is, which is consumer credit. So you can do that, but it's not really involved in the consumer credit process. And I guess my findings from when we were building for WhatsApp is the margins are pretty thin in that area, Norbert. So if you're going to go into that space, you've got to be very good at capturing the pennies.
Right, totally agree.
Yeah. And I think that's where a lot of payment companies have learned in the last 5 years is the payments look a lot of fun, but you've got to find where the money is. And that's the hard part. There's a lot of players in that one payment, isn't there? The issuer, an acquirer, a bank, a merchant, a MasterCard, Visa, Stripe, or Adyen. It's like there's a lot of people taking money off that ticket.
I mean, that leads us maybe also to the funding question, right? So if you take the installment payments and are you actually paying the vendor then also in these installments, or does the vendor get the money up front and you basically need to finance the receivables?
Yeah, no, we pay the merchant. We pay the merchant straight away, and we fund that. Yeah, so that's the model. That's why the merchant gets a lot of benefit. Is that not only are they getting higher sales, is that they're getting a fraud and risk management as well. Yeah.
So you could either you have the cash with your partners and investors who can provide kind of the pool, or you can basically sell the claims also into kind of the invoice financing, receivable finance type
Correct.
of companies.
Correct. And that's why fraud and risk management comes down to be critical for a business. 100%. Well, I hope that this has been worthwhile. I was quite nervous. This is a great group. I love the content you do, Norbert. Seriously, fantastic. And I would love to hear from any of you. I'll put my email on the message. Please, my personal email. Email me questions you have, or if you think I've got threats, or what we can do better, or what you think that we've got that sucks. I love to hear, man. Like, honestly, I'm learning every day from great people like yourselves, and each of you will have more value in areas that I don't know. So that's all I asked, and why I came here would be love to do that.
Yeah, thank you very much. That was a really great presentation and fantastic discussion afterwards as well. And I think also the theme of having like foreign founders coming to Japan and seeing this as a promising market. We've said clearly, right, our choices, even in the region, you can pick another market, and seeing this as the largest opportunity is quite exciting, and hopefully this will drive some further change. And by all of you kind of nudging, right, the overall system along in the partnerships that you have, is clear that the way the incumbent organizations work is also changing. So clearly, I think there have been some people before you who've done also some lifting, and it's
Yes.
kind of aggregating up now.
Yes.
Anybody who comes after you is also then benefiting from your work, and at some point we'll hit this part of the S curve where it goes pretty vertical. And